All right, we'll come to order at 3:03 PM. Let's go around the table and introduce ourselves for the record.
Scott Morley, Select Board.
Carrie Keenan, Select Board.
Dan Webster, Select Board.
Brian Monahan, Town Attorney.
Eric Holman, Westview Investment Advisors.
Ben Nostrin, Westview Investment Advisors.
Louise Gibbs, Westview Investment Advisors.
Matt Maxwell, Town Administrator.
David Barlow, Town Treasurer.
Very good.
Hi, nice to see you again.
Any changes to the agenda? Good. Public comment? I see any public here? So we'll go right into Westview Investment Advisors. Thank you for coming. Dan and
Yep,
Carrie for
we
the
met.
first time.
Nice to
And
meet you.
Yeah, nice to meet you as well.
Hi. Nice to meet you.
you probably have some questions and you guys might have some questions, so. go
Yeah.
ahead. The floor is yours.
Yeah,
So how did you want to start? We did the presentation once to you guys. Would you like us to do that again or handle questions up front or after?
I think, thank you for coming.
Yeah.
It's a nice day, you brought sunshine. I think that this is the first time for these three to meet you and listen. And so, yes, I'd like to start kind of like the way you did in Burlington with us, with the full board and, you know, introduce what you do and how you do it and why you want to work for us.
Yeah.
yes, of course.
Do you want to pass
So
out
yeah, we
the actual
printed these
physical day?
out, but we also, okay,
Thank you.
yes.
Thanks.
We can bring it up on the computer, but if you have it,
I'll look and I'll leave this here,
Okay.
just consider it temporarily with me.
we have plenty.
Yeah.
If it's all printed already.
Yes. and- You don't want one, David?
Have a minute? Sure.
Oh, it is.
Yes. But with
In that case, I'll let you.
so. Well, thank you again for having us. And your town is beautiful. Oh, I love your green over there.
Thank you.
But, so anyway, we're Westview Investment Advisors. And, we're a registered investment advisory based in Burlington, Vermont. But we have clients all over the country. So on that, so this is actually Newport. Yeah, we drove by that.
Oh, yeah.
Oh, yeah,
Yeah,
up in the church, maybe.
yeah.
Yep.
So who are we? We work with an array of clients from retirees, business owners, endowments, nonprofits. And we work hand in hand with our clients to really get to understand you, in this case, maybe the town, and what are your goals and what is your, investment. Like I was saying to David, not David, to Scott, when we first met with them, I said you guys get a lot of your revenues from Casella, like we are nimble enough to set at our firm to say, maybe you don't have direct investment into waste management companies because you already have so much leverage to them right now. So it's, again, your goal, your plan, we can build these customized portfolios and we really value, transparency. You will hear from us at a minimum quarterly with our quarterly statements. We create our own newsletters, but while we are an investment management firm and while we do, meet with, that's a big part of our day. We meet with our clients, with clients weekly, but we can meet with our newer clients. We like to meet quarterly, but sometimes we meet annually or biannually. It's really up to you. I know Scott mentioned maybe doing quarterly meetings. We are small enough and nimble enough to be able to do that. If you turn to the next page, just a little bit about just by the numbers. So we're, like I said, a registered investment advisory.
Oh, that page was removed. We shortened it for this,
Oh, we
from
did.
what we had before,
Oh,
but.
all right. So, okay.
You're a football, I
Oh, yes, I have our own one, yes. So where we are, again, I'm Louise. I've worked with Ben and at Westview for about 10 years, almost. I graduated from St. Michael's College in 2015, and I've done everything from the service and client onboarding process. I've done a little bit of research and portfolio management with Ben. When I've done some financial planning, which we can talk about with the town. You guys mentioned you might need some planning. And now I do mostly client relationship management, and I speak with our clients daily, weekly, monthly, all the time. And then Eric, you want to talk about?
Oh, yeah, I joined Westview about a year and a half ago now. I'm from Vermont originally, but then I worked for Fidelity after college, in various financial planning and investment management roles. And then I was a private wealth advisor, actually with Silicon Valley Bank through the bank failure. For a couple of years in Boston before being able to move back to Vermont and getting aligned with these guys. But yeah, like we had discussed before, my role, if I had to be put in a box, is the team's financial planner. I view that as very, very broad based. I mean, I work with, individual retirees just retiring from normal jobs, all the way up to very complex, multi-generational families and businesses and other endowments that we work with as well. I just, as a personal philosophy, I just view financial planning is something that is very needed in a lot of spaces beyond just individuals and beyond just normal business planning. And I really try to fill that gap. And I think Westview does a very good job of, like Louise said, being small enough and nimble enough to be able to do what is best for our clients. And we try really hard to position ourselves as a firm to be in that position where the big thing is we don't take on too many clients. We want to be able to be reached at all times by every one of our clients. We want to be able to schedule meetings where we drive 2 hours out to a meeting and not have to worry about completely blowing up a week. Because I think all of that feeds into that top level planning aspect. And if we aren't able to do those other things, we aren't able to fill that need for clients, which I think is first and foremost the most valuable thing we provide to people. I'll introduce yourself.
Yeah, well, I've been interested in stocks and bonds since I was in 10th grade when I invested in McDonald's with my paper route money. But from that point, my education was focused on finance. I was in Boston then for 22 years working at Putnam Investments, Fidelity Investments. And then I moved up to Vermont in 2008 to start my own registered investment advisor and create a firm that took out all the conflicts of interest as much as humanly possible. So that's why we're a fee-only firm. The only pay we get is directly from clients. We get no other third-party feedback or payment from anybody else. So there's no products we're selling you or anything like that. It's just our intention is to just provide you with the best investments out of the entire universe of selections to meet your goals. And, Eric being the financial planner, I'm focusing on investments, and we have a new person starting next week to also focus on investments, but all of us get involved.
Yeah.
And Louise is the piece that kind of holds us all together. So, with our in-depth financial planning, one of the things that I think you're looking for is, to just plan for this investment account to grow so that your citizens will never have to pay municipal taxes again. So you have a base to grow from and continue to grow those assets and fund any needed projects, things like that, into infinity, basically. So kind of look at it like a little Norway, which they've done the same thing. They've grown their endowment or foundation to be where people there don't pay much taxes. They have incredible services, things like that.
I want to just back up quickly. We've been throwing around the term RIA, Registered Investment Advisor. What that is we're not like a Merrill Lynch or Morgan Stanley or Wells Fargo. We are independent, like Ben said, and we are bound by law to do what it is in the best interest of our clients. And all of our personal portfolios are invested the exact same as our clients. And then we firmly believe in extreme transparency. Every single quarter, you will get a bill from us showing, this is your fees, this is how it's calculated, this is where it's deducted from if you choose to go that route. I know you're paying by check right now. And, you know, like we talked about earlier, the portfolios, which we'll get a little more into, is if there's anything in the portfolio that you oppose or you don't like, just call us, we'll tell you why it's in there, and we can say, okay, you know what, maybe that doesn't match what the town values are, or, you know, maybe it's might be just not appropriate, and we can get out of that quickly. So I think that's what you get by being at a size firm like us. So, next page, yeah. So a lot, and I'll hand this off to Ben, but it's about, and we've talked about a lot of this, but you might hear the active versus the passive investment management. And we've touched on it, but we are an active asset manager. We do, like, we sent you after the meeting, the sample portfolio. Not all, we do use exchange traded funds. We rarely use mutual funds just because they're higher priced, and it's 80 to 90% now underperform their benchmark. And with individual stocks in times of volatile markets like we're seeing right now, it allows us to be nimble and to say, okay, you know what, we do, with the tariffs coming, we do want to be less exposed to tech than the rest of the S&P 500 or than our benchmark. We do want more exposure to Europe, and but we don't want to be in certain sectors of Europe. So we just want to be in the financials. So that allows us to be that, you know, to have that strategic type of management. And that's what we do at Westview. Anything you'd like to add?
No, just continuing on with the investment process and philosophy. So we're not going to be, like Louis said, thank you. Customized portfolios. You know, we're gonna work with you on what's the right mix of stocks and bonds and alternatives. We went through.
I was drinking a lot of water on the drive. I'm all set. Thank you, though.
In the last meeting, we kind of discussed your investment policy statement, and we came up with kind of what we suggest would be a possible investment policy statement. But we want to work with you to kind of, you know, pin that down and get exactly what we're looking for based on your risk, your goals, the time horizon, you know, what short-term funding, intermediate term, long-term, that type of thing. So, but we can have different buckets, for example, in the portfolio, you know, long-term, or this is set aside for a project, you know, might be much safer, less risk. You know, we'll just, whatever it's going to be some involvement at the beginning, basically. Then the next couple slides, I'll kind of go through this. That's a little more specific on the optimizing allocation. So the top two graphs are basically, the one on the top left is saying, you know, 60-40, you're getting versus 100% in the blue, the 60-40 in the green. You know, the returns there over the long term are not as high as the 100% bonds, but maybe 60, sometimes it's 70% of the returns, but you have something like half the risk. So you're getting a good risk return scenario there. And that's what the lower graph shows. You know, you can see 100% bonds, and then all the way up to the upper right is 100% stocks with the most risk. But kind of the sweet spot is around 60-40. You know, as you get to 80-20, the risk goes out and returns get less, and then you go to 100% stocks. Returns get slightly higher, but risk increases a lot. So portfolio management is a lot about managing risk, really. So you'll find we're not going for any home runs. We're just going to try to get a lot of singles and doubles. Generally, we also are, you know, long-term investors. So when we find a stock, we do intensive research. We might take a whole industry, and could be 100 companies in that industry. We'll look at each one, screening by metrics. And then, you know, we might find a a handful of companies that kind of pass our metrics. That's when we'll drill down, look at the company, look at the products, the services, look at the competition. What kind of niche do they have? Is this something that can sustain itself over 5 years, 10 years? Does the company have a moat around it? Which is a Warren Buffett term that kind of like protects them in some ways, you know, network effect or scale, size.
Switching costs.
Switching costs,
name
things like that.
recognition.
So we take all those factors and then in those handful of stocks that we've screened out, you know, we might find one that we like, but if we don't have a high conviction on it, we might just ignore that industry and move on to the next industry. But we do tend to go after trends a lot. So, you know, right now, for example, we've shied away from companies that have more tariff risk than other companies. So we did have Freeport-McMoRan, for example, which is a copper mining company. We shed that before so-called Liberation Day came. And we've been getting more exposed to international in the past month, 2 months, which has turned out well. We have a Japan ETF, we have European financial ETF, and then we have a handful of individual stocks that are foreign. So a good example would be, say, Mercado Libre, which is kind of the Amazon of Latin America. They sell all over Latin America, get their products from all over the world, but they're not affected really by the tariffs directly. So that's essentially that reverse triangle that you saw.
We did this for every sector, every industry, every sub-industry. The three of us, and soon to be fourth, we all sit on the investment committee. We meet, and we meet weekly at a minimum. Oftentimes it's just, today you guys see this in the news?
Yelling down
Okay,
the
we
hall.
all gotta go into an office and talk about this right now. Yeah,
As far as the bonds go, you know, right now we have 7 asset classes in the average portfolio. It's important in the bond world that you balance interest rate risk with credit risk, because most of the time they're inversely correlated. So if you have a right mix of that, you can neutralize the price movement and get income from it. It smooths out the gains and losses as well. So this just kind of lists the different types of bond asset classes, which we're exposed to most of them, but not all of them at any given point, from lowest risk to highest risk.
And we're able to do that through several ETFs that we hold to be able to capture specific buckets within the fixed income world. But we're able to get a significantly higher yield, which with what, like Ben said, is lower price volatility than you might get by buying one of those individual bonds directly. Like for example, right now, our fixed income portfolio is generating 5 to 5.2%, which is minimal price volatility, just because we're able to hold such a diversified bucket of bonds instead of just buying treasuries or just buying corporate bonds.
And bonds are not something where you just buy and hold. You do a lot of trading, especially in the last 4 or 5 years. I've done more bond trading than I have in my entire life because interest rates were at 0 and then they went up to 5%. Bond market went down 16% in 2022, well, 14%, which is a huge hit, especially when people had 60-40 portfolios. You know, they're expecting the bond portfolio to help recover from or offset the stock portfolio somewhat, but that was the worst year on record for 60-40 portfolios. But it was good to be short that year. You know, you have less movement in the bond prices if you were short. Now, when rates hit, 5.5%, we actually started buying individual treasury bonds, and we still have some of those on the books, 1 year, 2 year. And those are still yielding 5% from a treasury bond, even though the 2 year now, if you bought it, it's 4.1%. So we try to be nimble like that and move around with the markets. Do you want to talk about this?
Yeah, just tools and software. I know a lot of these softwares probably mean nothing to you, but we do keep a pretty broad base of technologies that we keep at our fingertips. The we touched on it when we met with you guys in the office, but Black Diamond at the top is a new platform that we're onboarding. So from a client side, the reason we're doing this is there's a full client portal that you get access to. I mean, you can run your own reports, you can view everything from performance on any time frame you want, anything you want to see and analyze us and vice versa. You have through there. And the rest of these are generally research tools that we're using to do this ongoing research that we're doing within the portfolio, and the ongoing portfolio management.
Is there any questions so far?
Yeah,
Do you guys? Are like towns and municipalities, are they like different rules, different? Versus a retiree or a business, or doesn't matter with investments?
Well, for you, I mean, it'll be a little more planning as far as the numbers.
Yeah.
Dealing with, not when are you going to retire, the town of Coventry,
Right.
but how can we make that,
Mhm.
that foundation grow and pay every year, help support the town.
But also, I mean, in terms of operationally, no. I mean, it's effectively the same in that way.
Mhm.
But in terms of how you view investments and view risk, I think it is drastically different. I mean, a 50-year-old looking to retirement is viewing risk very differently than a board managing their town's money. It's a much different way you need to view money, you need to view risk. And you also view it very differently in that you don't retire and then start spending it in the same way a retiree does. You are looking into almost an indefinite future of, all right, we're going to need cash flow at certain periods of time, but we also do need these assets to grow at a pretty defined rate so we can sustain that again in perpetuity. So from an investment standpoint, that's where the investments and the planning get very integrated in how we view it. And I guess it's a slide we didn't include in here, but we have used in other client presentations, but this stock selection process, we effectively can, if you flip that pyramid over, we view risk almost in this pyramid vertically of your base is that it's the base of everything. It's how do you manage your cash? I know you have that large cash sleeve that we need to be able to keep very secure, but we do want to get a good yield on it. And then as we start moving up that risk ladder and looking out further into the time period that we're going out into the future, we can view risk very differently. I mean, you had about 22-ish years left on the current contract. That's a very good defined time frame where we can start looking at certain alternatives that might go out 10, 15, 20 years, take on higher risk buckets of stocks with a smaller portion of the portfolio, but knowing that historically over these long periods of time, they tend to perform better. And that's where I think it differs from, I guess, a traditional individual investor of, I need money on this period of time, where you get that traditional higher stock portfolio and ramp that down into retirement. I think it just, from an investment and plan standpoint, it's just slightly different. But sorry, to answer your original question, operationally, no, it is logistically about the same thing.
Still just basically looking at the client's needs and tailoring it to them,
yes,
whether
Yeah.
they're municipality or
yes.
just somebody retiring.
Yeah, absolutely. And I think too, I mean, from a personal finance standpoint, even individuals sometimes have some of those similar needs, right? I mean, I mentioned working with some of these multi-generational families. When you work with families that have significant net worth, they have similar needs of, all right, I'm not looking for me or my kids. I'm thinking about my grandkids and their kids. How does this money impact their lives? And I think that's very similar to how a town looks at things into the future, and how these generations that might not even be born yet, how is this going to impact their life, and how does this town look 15, 20, 30 years into the future?
Thank you.
Any other question? Or
Need it? Well, I'm not sure we're quite to the point where I'm gonna ask you. So,
Okay. Okay. We just had a picture of some of this sample reporting. Like Louise said, we do send everything quarterly at a minimum. We have a newsletter that we sent you a copy of this quarter's. You get a statement with the actual portfolio. Like I said, this software allows you, if you want to run reports at any given time when you're having a meeting, you can run it up to any time frame. And then also anything fee related, we give a full itemized, there's full transparency when it comes to that as well. We want to make sure you know everything that's going on within the portfolio and everything that's going on from our side as well. And then the fee structure part, I know we had touched on it briefly when we talked before. We do have a discounted endowment and foundation fee structure that we generally operate off of, and this is a tiered fee structure that you're obviously over the top tier, but it's on every one of those dollars in each of those buckets as it goes down the fee structure. But that blended fee at the bottom was based on the December 31st balance that we got, but that's obviously a slightly moving target.
And just for comparison, that's on the left is our standard, what we charge, and then for endowments, nonprofits, municipalities, we do offer a discounted rate for that.
And then the last page is the total cost, which Luis had mentioned it briefly, but it is something that we take into consideration a lot with any investment that we're making. Part of the reason that we also do like to buy individual stocks is because they don't have a management fee. With a lot of investment managers, you're paying the investment manager and then they're going out and buying funds. So you're paying fund management fees within that. So we try really hard to keep your total cost down. We take that into consideration with every purchase we make. If we are buying things like ETFs, we focus on making sure first that it's the right thing that we're buying and that we're buying the most cost-effective version of that. Because the total cost is very important, even though a lot of those fund fees are somewhat hidden. It's not a line item you actually see come out of any account. So that's just part of the broader picture in that fiduciary. I know it's an overused term, but when we look at our fiduciary duty, it is all of that. And the total fee is probably the most important thing that we look at when it comes to that.
So we'll use in the stock portion of the portfolios, typically 90% individual stocks. We use those ETFs when there's for example, the Japan fund. It's a lot easier and possible to buy Japan through an ETF rather than trying to get individual stocks in Japan. Or say banks, we wanted mid-sized banks some time ago. And, it got to the point where, these banks kind of all look the same after a while. And how do we differentiate? There's no real differentiator. So we want the industry. So let's just buy the ETF in that case. And in the bond section, that's where we tend to go down the ETF route most of the time.
But like, we talk about, we do buy some individual bonds, like treasury bonds, or we can buy CDs like you have in your cash account. We noticed that one just came due on 4/15, so we do buy individual bonds as well when it's necessary for the client.
And even with bonds too, and part of the reason we do buy the fund is one, it allows us to just target a specific duration of a bond, and it's a lot easier and more efficient to do it that way. But also in terms of cost, you actually are getting better pricing on the underlying bonds by buying it through a fund in most cases, where if you went out and tried to just go to Fidelity and purchase an individual bond, the execution is going to be much worse than if you buy the ETF. The fund manager is getting a much better execution because they're so large than any individual or even at our scale would be able to go out and buy.
Yeah, it's not like the equity market where everybody gets about the same price.
Yeah.
Bond market's tailored more to institutional buyers.
Yeah. Billions of dollars of transactions.
Yeah.
I just wanted to add.
Yeah.
For everybody, when you, your total cost comparison.
Yes.
The number for our current account management fee is 14,000 flat.
Yes.
It's not
That's
a
what-
percentage, so,
Okay.
and there's a fund in there that's actually combined. It wouldn't be part of the town investment account. Anyway, when you crunch through that number, it's actually 0.24. 0.24 on the current account side.
Okay.
Yeah, and I know we had touched on that briefly when you were in the office. A lot of obviously don't figure in that.
Right,
Yes.
but there it is.
Yeah.
But are there not other costs implicit in that manager's investments? Because if he's purchasing ETFs, for example, or other managed funds, there's going to be costs.
So they did that, they calculated.
Yeah,
Yeah.
if you just pull out this is with a number that we were effectively guessing at because we just didn't know.
Oh, okay.
But these are the actual underlying fund costs because we could see the actual positions.
Understood. Okay, got it. Understood. May I do some talking and questioning? Is that okay?
Yeah,
If it's appropriate?
let me zing first, and then you can
Zag.
zag.
Perfect.
So I've thought a lot since we first met also. And I think for us, you've been touching on it, we can't stress the planning piece enough. So I think to sum up my thinking, we want to get the most conservative bang for the buck, right? We are a municipality, we are safeguarding the tax base of this town. It's our job. And we're unique. Most towns probably aren't calling you. So we're trying to have our cake and eat it too, right? And we can, I think, if we're smart. We have a current portfolio. We have some current ideas on our future that are living, right? When we talk about 22 years, it's a real number today that could change tomorrow.
Yeah.
Right, and it could change either way, depending on a whole bunch of things in the world, probably longer. So that's a good thing, but thinking conservatively, we would probably want to keep that 22-year thought in mind. We have promised the town, big promise, hard one to really, that we will come in front of them next March with a much better plan for the financial stability of the town in the future. So that they can understand it and they can give us feedback and we can have next tier conversations about capital investments in our town and roads and bridges and all of those things. What's been happening for us lately is that we send money to our retirement account after we've bought our toys. And we want to do that the other way around now. So we want to say, here's our portfolio. We want to say, here's where we think the portfolio needs to be 22 years from now with all of these current expenditures, and we'll all have to work a lot on that together. Conservatively, and also with that knowledge, we'll be seeking the new number, the new annual contribution in order to achieve that number.
Yeah.
And we're pretty flexible here, probably to meet that goal and to keep that moving and living annually. So I wouldn't want anybody ever, anywhere to start with an idea, okay, well, here's the current bucket. Here's where we want the bucket to be. And so we got to invest aggressively to get to there. No, right? We don't want that.
Yeah.
We want the best of all of those worlds. We want full disclosure, full information, full transparency. And always with the thought that keep that real and conservative and safe and help us to identify how we achieve that with new monies coming in.
Yeah.
Does that make sense?
Yes.
Yeah. Yeah, you kind of just described, I know we touched on it a little bit when Ben was talking, that efficient frontier chart. I mean, that's how we're viewing everything.
Yeah.
Especially with how you view risk as a municipality of effectively what is the least amount of risk we can take to achieve what we want to achieve, because we don't want to run the risk of not achieving it. And then that just simply allows us to work backwards and say, all right, I mean, conservatively, if we're contributing X amount of a year or a month, a quarter, this is how much it will take to get to where we want to be. But at the core of it, yes, it is what is the most efficient, lowest risk way we can achieve that. Lowest volatility, et cetera.
And I see a plan that is always gonna be fluid. Up front, we're probably gonna be quite annoying to you because we're gonna ask so many questions and you won't have the information all.
I'll give you a max number.
I mean, we're gonna create these scenarios and,
Right.
you know, pass them by you and say, what do you think? You're gonna come back to us and you're gonna say, well, let's try this, or what happens if the market tanks, you know? We have the ability to show you different scenarios and the whole scenario analysis, even Monte Carlo simulations, which is kind of just takes, you know, 500 different scenarios of the market, how that, you know, what happens if you get a bear market today versus what happens if you got one 5 years from now, that type of thing.
What happens if inflation is 4% a year instead of 2.5?
Yeah, so we can
How does that
model,
impact you?
we can model all those scenarios out and get to a point where we have an average that you feel comfortable with and say, okay, this is our new target. This is what we're gonna tell the townspeople. We're gonna hit this in 22 years and, you know, we're gonna hit this in 40 years. And in the interim, we have all these plans. So it's kind of working closely together to make this a solid plan, so you can feel confident in that plan. And then you have to modify it each year, you
Yeah,
know,
right.
things happen.
Yep.
Things don't go exactly how we expected them, but. you know,
Probably better,
Right.
right?
So we have the ability to do that. And, you know, I know when we spoke, you were saying your budget in today's dollars about 1.3
Yeah,
million. Okay, so that's in 2025 dollars. Okay.
right.
What is that gonna look like in 2030? What's that gonna look like in 2040? Okay, and then let's say in 22 years, when you're not having the, what, 2.2 million, is that indexed to inflation? Is that?
We have a pretty good contract, yeah. How is their contract moving now, Dave?
Oh, in the landfill?
Yeah.
Yes, it's 2.5%
Okay,
increase,
so they're paying
but it's all based on tonnage.
Right,
on what?
Tonnage of
Oh,
waste
okay.
received,
Okay,
and that number varies quite wildly.
Really?
okay, Yeah.
Seasonally in particular, but also things like floods
yeah,
or no floods.
Yeah.
okay.
That makes sense, actually.
so we could give you, you know, we could give you some good idea
Yeah,
about what that looks like, over, you know, a snapshot of 5
Right.
Yeah.
years.
Yeah.
Yeah.
So that we can go forward with that.
And so when this 2.2 million indexed and, you know, it might fluctuate, it might be 2.5, 1.8, I don't know. But what does that number need to be in 22 years? Maybe it needs to be $75 million. And in order to kick off 10 million or 5 million a year to operate the town of Coventry, so you don't have to impose a muni tax. And
Right.
then if you could say, okay, well, I know you're redoing roads, that's a big capital expenditure. Okay, you're probably gonna have to do that every, I don't know, X number of years. Okay, so we know that's a upfront cost, or that's a cost. How do we plan for that? And if you do have a year when there's less income from the dump, not the dump, waste management,
Yep.
but you know, maybe you do put less in, but maybe 2 years earlier, you didn't spend X and you put more in, knowing that maybe you would have a less year. So we can help with all that. We can help with the management. We can help with the messaging of that. A lot of what we do is messaging to our end clients. And, you know, I only imagine like helping to facilitate that conversation with the town, and we can do that. And honestly, I tell our other clients this, you need someone to blame, you need a punching bag, you can say, you know what, Westview told us, that's what we're here for. You can say, we
There you
have to do this to hit our target.
We'll give you Lisa's number.
I was like, yeah.
Actually, we'll send her up.
Yeah, yes, blame. But it's, in the long run, you're gonna thank us for saying, you have to stay on track. So,
Sorry, Brian.
Long-winded.
Did you forget, you didn't forget, did you?
I didn't forget, but you're the select board chair, I believe, so,
It's yours.
thank you. So I've been the town's attorney for 8 years, and this town has gone through some serious changes in that time, and certainly the governance process for the town has gone through changes in that time. And Scott was on that board then. That board changed a lot. Scott was on it and then you left. And then it was a bunch of different folks. And then Carrie and Dan came on board and you, Scott, came back. And I think in principle, you folks have answered most of my questions about communication. You know, I think these folks, if they have any degree of sanity whatsoever, are not going to be on the board in 22 years or maybe even less than that. It's low pay and it's not very rewarding and it's highly stressful. So I just wanted to impress that upon you folks. And I think you at least have it in principle, which is that you're going to have a regular course of communication with the board. And I would say my advice, I think, would be to set up a very regimented process in the beginning so that you can have that line of communication. So it's really built in so that when these folks do cycle out, when they decide to leave the board, there's a regular process so that these folks are, whoever is sitting in these chairs is always getting those communications and is involved in that process so that they can make decisions. And I would say my experience in the last 8 years has been that this board has not been so involved in the investment decisions that have been made. And I don't really know what decisions have been made. I haven't certainly been asked about them, but I do think this board, because it's really taxpayer dollars is how I've always analyzed those landfill dollars. You know, it's the top line revenues for the community that come in the form of tipping fees, as they call them. But it's taxpayer dollars. So this board really needs to be involved in that process and at least be apprised of it and then signing off on decisions, signing off on your recommendations, that sort of thing. So I just think that's very, very important. And I wanted to just say that here, both for the benefit of the board members and for your benefit as well.
Thank you.
Yeah, we think that's really important as well. And I think we'll go even a step further as well. Louise and I are obviously younger, and Ben obviously will retire.
Absolutely.
Obviously younger, not just younger.
But Louise and I recently joined Ben as partners at Westview, and we have a succession plan in place that we view Westview as something that we want to be able to continue in perpetuity as well. And I know it's a problem, especially with smaller firms of top person eventually retires and then a national firm comes in or someone you have no clue who they are. We want to make sure, regardless of you guys, we want to make sure all of our clients have a defined continuation of the firm and that nothing in the operation of how we work changes for hopefully a long time.
Yeah, cool. That's great. That's great. You know, and I don't know that it necessarily relates to your process, but, you know, I think something to be aware of is that this town is very unique because of the landfill. And, you know, I don't know to what extent you're aware, but 10-ish years ago, this town went through some serious financial challenges. There was a disappearance of money. Somebody absconded with funds. We don't know exactly how much, but it was a lot of money. And I came in on the tail end of that. And I think it's going to be important for the select board going into the future to really be able to steward the town's funds. And certainly we are talking now about refining processes so that that kind of thing can never happen again. And so that there's, I think, more of a culture of diligence in the select board because of this special, literally golden goose that this town has that they really need to protect on an ongoing basis. And I think you guys you ought to study that a little bit and be aware of that as part of your stewardship and work with these folks, you know, so I just wanted to communicate that.
Yeah, great.
And we take, you know, you were talking about money disappearing. A part of our quarterly statements is there is a line item that says withdrawals, additions, management fees, gains after management fees, all that.
Right.
We will not take direction from just anyone who calls and said, I need money from this.
Right.
It is going to be, you're going to tell us the people who can, and maybe it is the treasurer and Matt, or maybe it's just the treasurer who has authority to give us direction to move the funds.
Or if you want multiple sign-offs on any money movement, I mean, we can
Yeah.
go as intensive as you want
Yeah.
to lock things down.
Yeah, and anything, I mean, I see that you have a money line set up with Fidelity right now. Anything that doesn't go, I mean, we will never move money based on an email. It has to be verbal, and it's one of us doing it because we know it's fun. We know our clients, we know what they sound like. If there is an abnormal transaction that we see, we flag that. and we reach out immediately if we see something like $1 million was taken out. Like,
Right.
Who did that?
Right.
Like, if we didn't initiate it or we didn't hear from the client, we look at that every single day.
Yeah,
So just.
and I think everything
internal
that this,
processes.
yeah, I think everything that this board is doing now is sort of in line with modernizing its financial practices, and I think whatever the process is, we should make it an iterative process so that this board figures out, how are we gonna do this? Are we gonna have the treasurer do it? Are we gonna issue an order that says to do it? What exactly ought it be? And this board should figure it out in concert with you folks to see what you feel comfortable with in terms of authority. Or is it gonna be the town administrator on an order from this board or something like that? But it should just be a discussion so that everybody feels good about it and so that it's public and that there are, maybe it's a two-step process or something like that. I don't know.
Mhm.
It's in the official minutes and you can't do it till you read the minutes.
Right.
Something like that.
Right, something like that.
That's a good one. Didn't even consider that.
Yeah,
Thank you for sharing that.
yeah, you're welcome. Those were my main thoughts, for whatever that's worth.
Thank you very much.
Yeah.
New thoughts, you two?
You're answering them all. As far as my questions, so you're getting them. I was more concerned about the financial planning, like Scott had touched on. A lot of this stuff, I'll be honest, it goes over my head and it always will, but the financial planning is a big, my concern.
Mhm. And we can come and project on there and just say, okay, at this rate, you're 99% going to meet your goal, but if you do this capital expenditure, or if we change from, maybe a 60% equity portfolio to 50% equity portfolio to 40% equity, how does that change the outlook for the town? We can do all of that. We stress test everything.
And with the messaging that Louise
Yeah.
touched on, I'm sure your citizens would have similar questions. Like if you have certain things that you want portrayed to people in a certain way, or have us explain things so they understand where their tax dollars are going,
The
We can-
transparency too was my other concern.
we can help put together. We've done it for charitable organizations to help, like I would say, advertise, but just explain to people that if they're going to be donating, like what is happening with your donation, how is it being used. So that is absolutely something we do.
We've
And
helped with their not to interrupt, we've helped
Yeah.
with their writing to put on their website. That's how hand in hand we work with our clients.
And it's similar to retiree conversations. As a planner, I think it's very important to not talk over someone's head in anything you're discussing, because if they don't understand what you're explaining to them, they have no clue. And it's important to make sure everyone fully understands at whatever level of understanding they had of the subject already.
They're in for quite a job with that one, you made.
No, that's what we're here for.
What do you got, Gary? You got anything?
Just what, is there like a contract, like a 3-year contract or 5-year contract?
No.
It's just a regular contract, terminable at any point.
If you leave mid-quarter, our fees are prorated to
But
whatever the
also
day
you
you
can't
left.
fire us.
I guess theoretically we could. Actually, yeah, theoretically we could. We don't do it. It's probably not in our best interest, but theoretically, yes, we
Either way,
could say, it,
not.
yeah.
If we decided, this isn't working out.
Yeah.
Yeah.
And there's some, like we were saying, we don't sell products, like with an annuity, it's an 8-year before you can get your money back, or you risk, losing money because you're not 100% invested. We do nothing like that. Everything in the portfolio is fully liquid.
Yeah, we have it all written into our investment policy statement. I know Ben touched on that a little bit, but investment policy is just a framework of our investment process and policy for you specifically.
Mhm.
But there's wiggle room for anything in there. And one of the line items is specifically that on everything we buy at its core is you could sell it and be available to you tomorrow. Every stock is available the next day, bond, anything.
Mhm.
The only alternative would be, because of your unique situation, is if we were considering things like certain alternative investments with longer duration that might have quarterly, yearly liquidation preferences. But that is something we absolutely would have full confirmation with beforehand.
Yeah, to buy that, you actually need the client too.
Yeah. Whereas with individual stocks, we'll make allocation changes without calling you every time we place a
Right.
trade. For something like that, that would be something that you would absolutely know. If there's any change to
Because
the,
it's getting locked in.
correct, if there's any change to
Yeah,
the core
with a
framework.
portfolio of your size, private equity would be an option because 86% of companies with revenues of over 100 million are actually private in the United
Yeah.
States. So it's this huge market that many people can't, and a lot of people don't go that route.
For various
But-
reasons. But because of your in
But if
perpetuity
you said,
and
if we worked out and you said, yeah, we'd like to get a little private equity, take a small piece, 500,000 million.
Mhm.
Keep that, and that'll be available in 5 years or 10 years or something
Mm-hmm.
like that. Part of the whole planning aspect, though.
So we're winding down a little bit of a tight schedule here. David, you've been taking it all in. Do you have thoughts, opinions, questions?
I have any detailed questions that maybe we could have a few minutes afterwards.
Sure. Yeah.
If you want.
No, go for
you can grow it.
Okay.
Sorry, I'm kind of twisting.
Early, the last meeting, you talked about your brokerage services provided by Fidelity. What kind of access would we have to that? Their system,
Full
or me
access.
specifically, the treasurer specifically.
So.
Yeah,
it's-
whoever's signed is authorized.
And I would describe my access now that the current provider uses Fidelity. My current access is read-only. And it's adequate. That's adequate, but I do have to have it.
Yeah,
So,
it'd be
oh,
the same.
yes, you would have,
I don't trust your monthly or quarterly statements, so I don't trust your monthly or quarterly statements. I want to see it.
yes.
Yeah, so
at the
you,
brokerage.
that Black Diamond software we're getting, like I said, you can run reports at any given time to fill it, but you do still have access to Fidelity the same way you ever did before.
Okay.
The authorization portion does come from Fidelity, so it's however that the actual sign off comes from the board for who has authorized access and how much, but Fidelity will grant that to you and you can log in and view Fidelity the same way. The reason we said Fidelity was because you're already on it. It's an easy transition and
Okay,
effectively it stays.
right.
In fact, it probably wouldn't even go away because we would just change the
Yeah,
advisor on the
exactly.
account. So you, as your current authorized access, would be exactly the same.
And if you.
The account number.
Unless you wanted to change it.
Yeah, you
Yeah.
could have it be more than read only.
No, I just want to make sure it wasn't all going.
Oh,
Oh,
no,
no, no, no.
you're still, yeah, even
I was
though
gonna say, and unless you wanted to, the account numbers would even stay the same.
they are, yeah, the account numbers would be the same, your login would be the same.
Yes.
It would just say, if you went Westview. And then if you wanted more access, you can most certainly have that. Okay, you don't have to, okay,
I currently can't take money out of accounts.
okay,
And, well, it depends on what these guys do.
Yeah.
Up to something, I don't know what it is,
yeah,
but
yeah. You'll have that, and you'll have access to the statements and with that.
Yeah, read only will give you full audit
we
access.
hire you guys.
Yeah,
Okay. Investment policy. Most of our portfolio, a good part of our portfolio currently is passively invested.
Mhm.
You guys talk active investment.
Mhm.
What history can you convince me that, for us, that active investment is the way to go? That seems to be what you're focused at, so. Two-part question, if we came back at you with basically a policy, hypothetical policy that was basically passive investment focus, is that something you would support?
So multi-answer is one, I would say that the portfolio you have now is actively managed by the manager because he has to choose the ETFs. So for example, I noticed there was some really long bonds on there, which has a lot of interest rate risk.
I said mostly, I didn't say, sorry.
Yeah,
Yeah, there's issue, I'm not to compare with the current, just because.
Yeah.
The current one meets our current investment policy, but it's the same policy we've had for 8 years.
so we do use, for
Is it either
instance, on the
efficient?
bond
Yeah.
side, we typically use passive funds.
Mhm.
Um,
Yeah, that I understood.
And then on the stock side, we use individual stocks, one, because of the expenses, as we spoke of before, but two, because there's transparency for us and you. So if a situation such as COVID, for example, came along, we were able to tailor the portfolio to get rid of individual stocks that might be directly affected. Same with the tariffs, like I spoke of
Yeah, I
before.
understand active investment, you're, in a sense,
That's
trying
why
to make an educated choice about what's gonna happen.
Yep.
But there's a lot of writing in the investment world out there about how over time, the passive method is shown to be superior, outperform.
Mhm.
That yes, you can outperform any given year, but doing it for a long time would seem, based on all the stuff I've read, to be not feasible. So, whenever the town gets to revising its investment portfolio, which investment policy, that's part of that discussion. And just want to, when we were to come hit you with something that's somewhat different than what you're proposing,
Yeah.
it's like, what's that gonna do?
So we absolutely can. We do candidly, for some of our smaller dollar clients, we have ETF models because it's easier to purchase for smaller accounts than buying a bunch of single shares of stocks. So we do use somewhat fund-based. They're not all passive per se, but it is something we do. So would we be able to do it? Yes, absolutely. Would we have a conversation about where passive fits into the broader portfolio versus active versus alternatives? Yes. And I think part of that comes too from the planning aspect of not just the long-term planning, but planning around designing the IPS, investment policy statement, whether it's you guys just writing it yourselves and coming to us, or whether it's a collaborative piece, or if you just wanted us to write something for you, right? That's where it's client specific on how they want to actually approach that.
And that's where we're dealing with public money,
Yeah, yeah,
is that 800-pound gorilla in the room that we
Yeah.
always have to keep in mind is in the room.
yeah.
So, okay, you mentioned Monte Carlo simulations. Who's the expert?
Okay.
We all talk about it, but
You won't run down too deep here, I promise, board, but independent variables, I'd be interested in that, independent variable discussion, what type of distributions you're applying against whatever that set is, what they look like, basically that I have a trust in what you're getting out of that model.
Yeah.
Yeah,
Oh, sorry. Yeah, so primarily,
And you run those yourselves.
no, so primarily we use a software called eMoney. But I can show you everything that comes along with that. But it does give us transparency into how.
But it's a tool you run.
Yeah, oh,
You
yes,
put in the numbers and.
yes, yeah, and then that allows me to plug in effectively any variable we want, when it comes to cash flow in, cash flow out.
Ultimately, as part of the planning that the board requires to go forward, this is really kind of the sales isn't quite the right word, but it works for now. It's the kind of how you close the deal on, does this plan make any sense or not?
Yeah,
yeah,
Right, because we've modeled it and
Yeah.
over a bunch of different possible scenarios, it might happen and might not, and you're right that
yeah,
that's sort of the ability of that plan to withstand the challenges of time.
yeah, so primarily with any plan, whether it's an individual or a large organization, I try to build out the core where things stand today. Effectively, if we just plug it in as it is now, we didn't make any changes. And then run Monte Carlo simulations to stress test and see like where is the high end and the low end of this. But then on top of that, the software specifically allows me to plug in effectively any negative variable I want. Inflation increasing, market underperforming for X period of time, different cash flow needs than were expected. And it will show you, this is what would change dollar for dollar. And it allows you to see it. Effectively, we can toggle on and off and see, this is what would happen in this scenario, this is what would happen in this scenario. That's too where it comes in from an organization's preference of, yeah, if the stock market underperformed drastically for the next 20 years, that'd be really bad, but that is a risk we're willing to take because that probably won't happen, right? So that's where there's some give and take when it comes to the actual planning process.
Okay. probably enough for now for me, although maybe we can have a, as you're heading out, kind of little quick
Sure.
Oh, my
things.
gosh,
for-
yes.
Plus, again, we're always available, so you can always call us
Mhm.
anytime. Someone always answers the phone right away.
Yeah, these guys still in the office, but we have our phone system. If you call our office, it rings in every one of our offices at the same time.
It'll be a test who answers it.
Yeah.
Caller ID.
Oh, no, it's Scott.
I got one more. Your fee, does it change whether we bug you every day? Or we say we only want you to invest?
It's,
Doesn't change.
no,
No.
it's based on, assets under management.
That's, like Ben said, that's a full wrap fee, so there's nothing underlying. And if there is, it's disclosed.
Hmm. Been on the hot seat now for over an hour, you
Yeah.
guys. Brian? Any last minute thoughts?
I think I'm pretty good. I guess I wanted to build on David's question was the only thing I wanted to do, which is to say, I think to really hit David's initial question is why active over passive, period.
The one, like Ben said, the ability to be nimble, we actually have a slide on it in there. But also being able to be strategic with the areas of the market that we hold. I think the common, I guess, risk that's overlooked with active versus passive is the concentration that comes along naturally with passive investing. Especially when we look at it as portfolio managers as downside risk. I think the example I'd like to use is like 2008, for example. Leading into 2008, financials made up something like 25 to 30% of the index. So if you held a market weighted index, you held 25 to 30% of financials. Banks led the downturn all the way through the end of 2009. But what actually led the markets out of the bottoms of that recession was financials as they started to recover. But by the bottom of that market, banks made up something like 3 or 4% of the index. So effectively, by holding passive, you were holding financials at its highest allocation, and
Yeah.
you effectively were buying it at its bottom as it came back up.
And the other example
It's recent.
Oh, sorry, go ahead.
is recently, 2022. The markets were down pretty heavily, and a lot of that was led by tech.
Yeah.
23 and 24, tech was something like 32% of the S&P 500. So if you had an S&P 500, you did really well in 23 and 24.
Yeah.
But right now you're not happy because it's
Tech is soft.
30%.
Yeah.
So some people group these 7 securities, basically almost the 7 largest, as the Magnificent Seven. A couple of those aren't technically. It's Alphabet and Facebook / Meta are both in communication services, but those 7 drove, the returns in 2023, for example, on the S&P were something like 15–16%, but the Mag 7 were north of 70% on average. And if you took the other 493, take those 7 out of the S&P 500, the actual return of those was something like 5–6%.
Yeah.
So,
Yeah.
but you're getting this huge. You'd have to have 30. I think with the 7, you'd have to have 34% of your portfolio in those 7 stocks, which is completely undue risk that we wouldn't allow any of our clients to have. It's just way too much
If
risk.
you're going out and buying an S&P 500 index fund,
You're
you
getting
don't
that.
think of that. You think you're buying 500 companies, which you are, but not really.
Right, it's heavily weighted.
Yeah, and that's where I think,
Those 7
when it-
were down 40% in 2022 before the big rise.
and when it comes to underperformance or overperformance, I think the thing we really try to stress is we are not benchmarking ourselves to the S&P 500. We're benchmarking ourselves to a predefined target allocation and objective of a portfolio. And we are not just buying S&P 500 names. We're buying a lot of mid caps. We're buying international stocks. And these are all things that are not going to be captured in just buying one index fund. And candidly, all of the junk that gets into that index fund as well that we're effectively getting exposure to.
Yeah. So the benchmark we've used, which is changing, but it'll be similar, is, what I would like to consider the investable universe. So it's not just the S&P 500 and, 60% and 40% the Bloomberg aggregate. Some of it's the S&P 500, but some of it's, mid-cap stocks, small cap stocks, international stocks, emerging market stocks, that type of thing. So it's not just large cap, which is the S&P 500.
That was good. I learned something there. That's a very good explanation.
I appreciate it, yeah.
We're managing risk. It's taxpayers' money, like
Yeah.
the gorilla in the robot. What we are doing at our core is, yes, you like to see the return, but we are managing the risk in that portfolio.
Yeah.
And I think that's really where the active part comes in, and especially because Coventry is so unique. I do think, and we do think that the active approach can provide more downturn and risk protection there based on everything that we just talked about. So,
Helps me. Thanks, Lisa.
Last thoughts, questions, you guys? Just keep things moving here. Matt, you've been quiet today.
I'm good. I made my decision a long time ago.
Usually Matt's yelling at all of us, hurry up.
I'm good.
You're good? David?
Well, just close with any references that you might provide us.
yes, I can
Sure.
give you.
Yeah, we just have,
I think you told us last time you don't have any other municipalities that you manage, but
no,
maybe a nonprofit or two, or
yeah,
Yeah, we can give-
prefer down? I feel like
an
that's.
endowment or foundation, somebody that
Would be comfortable talking.
would be comfortable talking to us.
Yeah,
Yeah.
yeah, we have a couple, we can get you.
Yeah. We can give you 2 or 3. Yeah.
Any last minutes for us?
No, and we appreciate all the time you've given us, and appreciate you even finding us. That does mean a lot. So, yeah, I mean, like you said, any questions or anything that you have, we are very overly available.
Okay,
Here's my card. It has the office number, email. If you guys have any questions, it's there.
Perfect.
Feel
Excellent.
free to ask us. We do have, you can keep those. We have the newsletters.
Oh, yeah, we do have,
And
My God.
just if you want to know about all the services that we've touched
Yeah.
on, it's all in there.
we have a couple copies of each in there. I think that's all I have in there.
Yeah,
There's some legal stuff in there for you.
Yeah, I'll love to read that. Yeah, that's what I do at
The
night.
contract, if
Yeah,
you have any questions on
The
that.
legal
Okay.
stuff is over here. If you would.
You guys are on Pine Street, you Maltex building? or-
A little
Way up
further down.
downtown,
Where Ski Rack is?
between College and Maine.
Yeah, got it.
Should be like City Hall Plaza, City Park, City Plaza.
City Hall Park.
The block.
Just go 1 block down the hill.
Yeah,
on the-
yeah.
On the backside of.
You're 2 blocks away from me. I'm on the corner of Main and Battery.
Oh,
Oh,
Mhm.
where are
Yeah.
you?
Good carpool.
Corner of Main and Battery.
Yeah, how you doing?
what's the term?
Monahan Safar. So, for a long time, Bergeron Paradis Fitzpatrick had that building.
Yeah, they're in Essex now, right?
They consolidated out to Essex and
Yeah.
we bought that building a couple years ago when they moved.
Oh, nice.
Wow.
Yeah. So
Have you
Yeah.
been to, oh my gosh, just there, Santiago's?
no, but my wife's going tomorrow night, so
Oh,
I'll get
it's.
a full report.
Lisa's been bugging me
Maybe
to this
there's all the legal
Oh,
docs.
sweet. I'll read that. I'll give you guys a full report.
thing.
all right, Matt,
Nice.
yell at us, you usually do.
Keep moving.
I have one of,
Barely went over.
I have a sample contract if you'd like to see that.
Yes.
Okay.
Yeah.
And we have a sample in investment policy state.
Yep.
Sample investment policy statement as well.
Yep.
I'm just gonna leave you with all of
Just give them
this.
everything.
Yep.
Yes, if you decide to go with us,
Yep.
it's all on this side.
Your sample contract would be the same, except for just swapping out client names essentially.
Yeah.
It's
Yep.
it's blank.
Yeah, okay.
And then here's your sample IPS, Westview, basic information, a risk questionnaire to it, and then.
Yeah, we do have to do the risk
final thing
questionnaire.
For Fidelity. if you
And
decide
the
to go with
ADVs
us.
in there, right?
He has all the legal stuff over there. I guess we can keep it all together. It's up to you. But you have the ADV, broker, it's TRS, privacy
Okay.
policy, our proxy voting policy. Yeah, and then, yeah, you have 2A and 2B in there. Yep.
Okay,
So you have all of it. Mhm.
good to meet you guys.
Thank you.
Yeah, nice to meet you.
Yeah, in Burlington.
Yeah. Stop by, seriously.
Yeah, all right.
We're always there.
Appreciate it.
Cool. All right, as am I. Hey, Ben, good to meet you.
Pleasure. Thank you.
Yep, see you soon.
Nice to meet you. Yeah. See you.
Good to
Nice to
meet
meet
you.
you
Yeah, yeah,
so much.
yeah. See you in Burlington.
Yes, we'll see you around town.
Yeah. You enjoy Santiago's yourself?
Yes, I do.
Oh, yeah.
I've done, if they're Cuban, it's excellent.
Yeah, it's on their menu.
I do really
All
like
days
it.
like today, I got no problem.
Oh, really?
But
Cool.
it's
Beautiful,
Yeah.
after the weekend we had.
Yeah, which, it's good to have.
Yeah.
Good to have different stuff.
Enjoy your trip.
Yeah.
Thank you. Oh, gosh, and thank you so much for the water. Thank you. Yes, enjoy the night.
I don't know if those are in there, if you want them.
Cool, yeah, I'll put this.
Right.
These you or that them?
Me.
You, them. It's Raiders, yeah, okay.
We have cleaner language for this one.
No. So just say whatever Brian tells you. to say. Cause the only thing I have is that's a printout for the LCT. That's all I have.
We can just, we get banned in a minute.
Yeah.
Be right back. All right.
You want me to open up Kate's office or you wanna go over there? Dave's the only one in the building right now.
Yeah, give me 1 sec. I just wanna, I know it off the
So
top of my
you already know what I'm thinking?
I do.
That's scary, Brian. For you, not for me.
The thing is, I've been married to my wife for almost 20 years. I don't know what she's thinking, but I know what you're thinking.
Yep.
Might need your readers.
What you looking at?
Is this Hancock Hill? I'm trying to find our parcel.
It's the one in gray, Carrie.
Oh, over here.
Yeah.
Okay.
That's why I did it in color.
Gotcha, okay.
And that's as big as Deb could make that map, but it's in gray.
Sure.
It's weird that doesn't have the other. That's not accurate.
Why?
No. Because it doesn't have the other side of the top hill there in the town line all the way to Markel.
Well, no, that's the part of the map that had that parcel on
Okay,
it.
yeah.
There's,
Yeah.
it's there.
Yeah.
I only took the part of the map.
That's
that-
you.
Okay. Thank you for the map.
Okay, go ahead. You can motion to
And give us 1 second.
enter executive session and make sure you state both the reasons that you're going in.
You guys want to try to read that scratching?
Found
If you want me
Oh,
to.
nobody checked it over to Kerry or Scott.
My handwriting is getting worse as I get older, I have to say. Pass that down, please, Dan. To Scott, and then he can read it. That's his motion, and then you guys can vote on his motion. And if you need me to clarify it, let me know. You pass that down, Carrie. That's Scott's pen. And if you want, I can just talk it through for a moment, Scott, and then that might help you
Yeah.
analyze it. So my advice to you folks is that we're going to be discussing two sensitive legal topics. One about the town's preliminary audit report, and the other about potential brewing real estate dispute involving town property. I want to provide you folks with legal advice that I think is best done in private for now. There may be another time when we can release the information to the public, but on a preliminary basis, I think it's important that this board have the opportunity to talk about it in private, to get my legal advice and think about it, talk about it candidly, and when and if the time is appropriate, we can release that information to the public. And because of that, the open meeting law allows us an exemption. Customarily, everything we talk about has to be in public as a public body. But when you're obtaining confidential attorney-client communications, you're allowed to do that in private. So I think on these topics at this time with the information we have, it's important to go into a private executive session to do that. And to do that, you have to do that on a two-step basis. First, we have to make a specific finding that if you talked about it in public, it would put the board at a substantial disadvantage. And second, then you have to determine that there's a reason to go into, that you want to go into executive session. And so I sort of provided Scott that language in poor handwriting form. That's kind of my summary of it.
Thanks, Brian. I certainly agree. We had anticipated the executive session, therefore warned. Thank you, Matt, for doing that. So you guys, you're all set with that? Yeah. All right. So with that said, thank you, Brian. I believe we need to have a private discussion, because to do it in public would place the select board at a substantial disadvantage, because we need to discuss preliminary audit findings and also an emergency dispute about town property.
Emerging.
Excuse me, and an emerging dispute about town property. Therefore, I move to go into executive session to obtain confidential attorney-client communications on these topics.
Second.
All in favor?
Aye.
We are out of executive session at 5:34 PM. Go ahead, Carrie.
I make a motion to task Matt, the town administrator, to research feasibility to create a town accountant position and engage the necessary professionals to enact appropriate financial policies for the town.
Second.
All in favor?
Aye.
Aye. Thank you, Carrie.
Mhm.
Here.
And part two, I make a motion to direct the town attorney to correspond with the officers regarding the town's the town's rights to the gravel pit property on Hancock Hill pending select board's final approval of the drafted letter.
Second.
All in favor?
Aye.
Very good. Okay,
Make a motion to adjourn.
Second.
thank you.
All in favor?
Aye.
Aye.
5:35 PM. Thanks, everybody.
Thanks, Matt.
Thanks, Matt. Thanks, Brian.